I hate stories like that because it makes me worry. It's like when you see the newspapers running a front page story saying, rush into stocks, you'd be dumb not to own stocks, or get out of stocks. Whenever you see those kind of stories, they tend to be counter indicators of what's going to unfold next. And the problem with gold is we keep running up and retesting that $1,000 an ounce, and we just don't manage to get through it. And everybody has a different reason for owning gold at the moment, it seems, and they're contradictory. So I'm confused as to actually what the real driver of a breakthrough, that $1,000 an ounce, would be. I don't know about Hugh. I mean, you used to be a fan of gold, but you've gone off.
No, you summed it up perfectly. I mean, I keep telling you, I made 50% from gold in my hedge fund in 2003, and I tell you, I couldn't read financial publications because they told me I was an idiot, told me I was a crazy guy, said gold only goes down, it's a barbarous relic, they'd quote Keynes, right? I made 50%. Right. This year, I can't lift a paper without it saying buy gold, buy gold, buy gold. And you can't dismiss this silly thing in Germany dispensing gold little bars at a $30 premium to the price. Yeah, that shows that there's been a mania, and we've brung in a lot of people. Now, they're right. They're right to have misgivings about money and as a store of wealth, dollars, pounds. Yeah, they're right to look for another currency. But my point to Philip Newman is, hey, look, gold is no higher now than it was in March 2008. Now, that's a long time now, right? That's a year and 3 months. And we've had, as a gold conspiracist, you know, the old guys that bought gold all the way down, who wear Renmarks, right? And talk about the end of the world, we've had everything that they dreamt of. We are physically printing money, yeah? The US is running budget deficits of 12 or 14%. And gold is no higher than it was in March 2008. So I say to you, Phil, something is fundamentally wrong just now in gold, and the fundamental issue is it's over-owned.
But I think if you look at the gold market, I mean, what's important for the investor? I mean, you have to look at the reasons why they're buying it, and I think there were so many different reasons. A lot of those people who are buying, you know, the small investor, the retail investor, are not necessarily buying gold expecting it to go to, say, 1,100 or 1,200. They're buying it because their belief in the financial system was shaken so fundamentally, and they've seen the falls in the mainstream financial assets, whereas gold has held up relatively well. So in that regard, it's not about sort of, you know, wealth accumulation, it's wealth preservation, and I think you can't really sort of underestimate how important that is in the market.
But I think, isn't the point then that if we get some, as I think we've said many times, time is the healer, as we get some clarity on what happens next and which asset classes are going to benefit from this process of printing money, the world hasn't collapsed. Won't the money start to come out of gold and just find a new home, either in government paper or conversely in equity, as we start to see maybe some real recovery in underlying economies? Isn't that the point, that we've kind of had the run?
That is possible, but I think, again, because a lot of the investment has been because of the mistrust in the financial system, that will take quite a long time, I think, to heal. So yes, you can have a sell-off, but I think it'll be quite slow, quite protracted over a period of time. But I think also, although, you know, over perhaps the back end of this year into next year, as sort of stocks do start to recover, I would question the extent to which some of those investors, particularly say the high net worth, you know, private families, for example, do sell their gold they've purchased, or think, well, it's 1 or 2%, we'll just hang on to it.
Yeah, it seems, given the way that the ETF market has evolved, or the ETC market, I suppose we perhaps ought to call it, that now if we want to know what's going to happen with the price, we need to watch the speculative activity in the ETFs. Is that a fair assessment now of what's determining the underlying price as it's reported by us day in, day out?
Well, I think, you know, the ETFs, we've seen obviously tremendous growth since they were introduced. I mean, more recently, slight sell-off, bit of stability there. Yeah. I'm not sure really how much of that is speculative, but if you look at the holdings, the overhang on the NYMEX, on the COMEX, that is actually pretty high. And that is one perhaps to focus on.
I don't know how you feel about this, Hugh, but I feel the market dynamic has changed just because it used to be determined by people who took physical delivery or had ownership in a vault somewhere or in their home. They had some Krugerrands, but now it all seems to be about who's rushing into the ETF, who's rushing out of the ETF, and that's dictating
don't forget the
some
ETF
physical
is
pricing.
taking physical delivery. And again, and don't get me wrong, I think if you are, you know, uber wealthy, whatever that means,
Yeah.
But I think you should have like 5% of your assets in gold. I think if you've got 5% of your assets in gold, who cares what the price is? The price might be $600, it might be $2,000. I'd have 5%, but for me to have any more than that, I really need to shake out a lot of people from it and to have it out of these papers. And so I'm thinking 2 years' time or a year's time or something. But, you know.
Philip, it was good to see you. Thanks very much for helping